What's good, ladies and gentlemen? Welcome to another SK Wealth Academy podcast. Now, today's podcast, I'm going to speak about the ticking time bomb of global financial markets. So, I've written in the past few months plenty of stories on my new site at malamalama.com/WordPress. I know a lot of you found me because a lot of my articles have been republished on Zero Hedge, sometimes even on the front page, because there's one article about gold that received more than 300,000 individual reads that was published on Zero Hedge recently. But know that not all my articles get reprinted on Zero Hedge. So there's some very important articles I write that never get published on Zero Hedge. So number one, if you want to read my articles first, they're always published on my site before they're ever published on Zero Hedge. So to receive the most timely information, please bookmark my new site. I'll put it in the link below in the show notes, so you can find it there. Go to it and then hit the bookmark. And then you could always read my articles first by visiting my new site instead of Zero Hedge. So that's the first thing. So in the past few months, I've written a number of articles. One about the US dollar breaching the point of no return. In fact, for those of you that wonder, because sometimes, on these videos I say, hey, if you want to become a patron, and you can become a patron at a mere cost of a cup of Starbucks coffee per month at a transcendent level, because that level will give you the biggest bang for your buck as far as benefits are concerned. And what that gives you access to is a number of daily videos every week, like anywhere from 4 to 6 daily videos every week that range from, I would say, 4 minutes to 12 minutes per daily video. 2 extended format audio only podcasts every single month that range anywhere from 40 minutes to, if cases there are an extreme amount for me to discuss, up to even 90 minutes each. And then some articles that you may see when you visit my new site says Patreon only, password protected. So a number of those types of analysis, which gives a lot of guidance. In fact, one of those, I predicted the US dollar was going to crash before it even started crashing. And the very next day, it started just tanking, as you were like, if you look at the US dollar chart. So I gave my patrons a heads up as far as exactly when the US dollar was going to start to crash. I wrote another article, and again, I'll put the links to these articles I'm referencing right now in the podcast show notes below, so you can go check it out. You can go check out my track record. You can go check out sneak peek into a portion of these daily videos. I'll put all those links into the show notes below. But one article I wrote, I said why Japanese should buy gold now, because it had to do with the price of gold in yen. But obviously, the price of gold has been rising against all fiat currencies in the world. But that in particular, gold prices have skyrocketed since then. I wrote another article called A Guide to Avoiding the Road to Serfdom, David Goggins versus F.A. Hayek. So I compare the two philosophies. Why TikTok millennials should stop Robinhood day trading. And I told that just a few trading days before a lot of the most highly day traded stocks by millennials tanked, and millennials lost a grip of money trying to day trade these stocks that they thought would go up forever. So I released that article just a few trading days before those stocks tanked as a warning, but I doubt many millennials read that article at all. And so they're continuing red flags that point to a complete global financial meltdown on the horizon. It's on the horizon. I can see it already. For all of those that listen to mainstream financial news, you're not going to see it all, because mainstream financial news is so ridiculous that when I look at these websites, even today, when I was looking at the website, they're still quoting Tom Lee of Fundstrat, which is ridiculous because he has given the most ridiculously horrific, horrible forecast for Bitcoin prices for like 5 years running in a row. He's given the most, like saying Bitcoin would end the year 35,000, 50,000, 40,000. He's been so wrong that I can literally train a chimpanzee to throw darts and go back for the past 5 years, because chimpanzees don't know what Bitcoin prices have done the past 5 years. And just from the start of each year, if I put the Bitcoin price and then a bunch of prices on a dartboard, above and beyond where Bitcoin prices started each of the last 5 years, say like 2016, 17, 18, 19, 20. I guarantee the chimpanzee predictions for where Bitcoin prices would end the year would be multiple times better than Tom Lee. But because this is how the mainstream financial media works. It's always about misdirection, disinformation, misinformation, that they always have the same people back on their shows all the time. That's who they give exposure to their audiences of millions, hundreds of millions of people, to the worst financial analysts possible that a chimpanzee would beat with little effort. So that's why people don't understand what's really going on in financial markets today. Because just like Robinhood day traders didn't understand that Robinhood was selling their day trading data to brokerage houses that employed high frequency trading algorithms that could use that data against them. They didn't understand that. And in the past few weeks, I've been continuing to observe this type of behavior in the markets, including commodity stock markets, bond markets, that point to a continuing erosion in the stability of global capital markets that's going to cause a lot of tears in the future. At some point probably over even the next few months. I don't even think we have to wait till like midpoint of 2021 before this implosion starts. So believe it or not, even the unnecessary lockdowns that have had devastatingly life-changing economic consequences for billions, not millions, billions of people around the world, they've had significantly negative impacts upon the shrinking liquidity in the global banking system as well. Because what's happened through these lockdowns, it's negatively impacted the cash flow of the world's largest drug cartels. There's tons of articles out there. I'll put some of the links again in the show notes that just say their cash flow has been negatively impacted in the millions of dollars of revenue per year. But since drug cartels make billions of dollars every single year, I don't think it's just millions. I think they're losing hundreds of millions too, possibly aggregately. I'm talking about singular drug cartels are probably losing hundreds of millions of dollars of revenue because of these lockdowns and the fact that basically prevent their trade in drugs and all kinds of illicit black market goods and services, human trafficking and whatnot, that aggregately their losses are probably in the billions of dollars, at least at a minimum in the hundreds of millions of dollars. And the last time during the 2008 financial crisis, I think this was in 2007, a lot of people to this day still don't know about it. And the only people that know about it are the ones that probably listen to my podcast on a regular basis, because I've spoken about this in the past, that there was a global bank system liquidity crunch in 2007. And the head of the United Nations Office on Drugs and Crime, Antonio Maria Costa, said, you know what saved the global banking system from collapsing because of a lack of liquidity in 2007? They said the drug cartels fed them all the cash they needed because they had a cash crunch. Not in America, but the entire global banking system. So recently, FinCen, which stands for the Financial Crime Enforcement Network, leaked documents that I discussed in a recent podcast. Although the title had nothing to do with it, I actually discussed a lot of these leaked FinCen documents on it has something to do with like people's belief that China is the big evil that threatens democracy in this world. So if you just go find that it's only like one or two podcasts before this one numerically. So if you look for it, you'll find it. And then towards the latter half of that podcast, I talk about these FinCen leaked documents. And they revealed that many global banks are still laundering billions of dollars of dirty money for drug cartels. But because the global banking system has depended upon these billions of cash being laundered through the global banking system to provide that liquidity. And I told you that the politically enforced, not the health enforced, because they're enforced for political reasons and economic reasons, of these lockdowns all around the world have negatively impacted and severely negatively impacted drug cartel cash flow. Then the global banking system has been experiencing a liquidity problem because the number one source of their cash to provide liquidity in the system is drug cartels, and the drug cartels' revenues are going down. So, you may have heard before what they said was an urban myth, but it was actually true that most US dollars have traces of cocaine on them. The reason isn't being because just people, it isn't because hundreds of millions of people all around the world use US dollar bills to roll it up and snort cocaine. It's because those bills have been handled by drug cartel operations. That's why they have traces of cocaine on them. And then they end up funding, as I said, the liquidity in the global banking system. That's the reason why. If you've heard of that before and you never knew why that was. So as global drug cartel revenues dry up, so does the liquidity of the global banking system. And 1 year ago, almost to this day, I'll put another link in the show notes below to an article I wrote on my news site and blog about the tenuous parasitic relationship between the drug cartels and the global bankers, because they depend upon each other for their survival. The drug lords to launder their money so they can spend it. The global banking systems depend upon the drug cartels to provide the liquidity they need to operate on a day-to-day basis for their daily operations. So when that dried up last year, I wrote the article saying, hey, there's an explosion of the overnight repurchase agreement market, right? Overnight repo market, in which U.S. central banks had to step in, provide liquidity to U.S. banks that amounted to hundreds of billions of dollars every single week and trillions of dollars monthly. That's still ongoing as of this month of October 2020, began in the fourth quarter of 2019. And the mass media financial system never put two together, never connected the dots I'm connecting for you right now on this podcast. And they basically ignored that. That's why I said also, people don't understand. They don't understand the chess game that's being played. These economic lockdowns that distract us from what's going on in the financial world underneath the scene. So the mass financial media can just ignore those operations as if they were completely normal when they're highly suspect, highly abnormal, and it's a very abnormal emergency operation undertaken by central bankers provide these trillions of dollars of liquidity to the overnight repo market that became necessary due to the fact that the multi-billion-dollar cash flow from drug cartels was drying up. So again, I'm going to just read you something that U.S. central bankers wrote on their website regarding the period of September 15th to October 14th, 2020. So the period we're in right now. It says, the desk of the New York Federal Reserve Bank plans to conduct overnight repo operations on each business day in a series of term repo operations. The aggregate operation limit of each operation is $500 billion, and proposition limits are $20 billion per bid. Each operation will settle the same day as the operation date unless otherwise noted. Okay, so end quote. So during the first 2 months of this year, let's see, the U.S. central bankers, they reduced that aggregate limit of each operation to 30 billion to 120 billion, down from 500 billion. So people said, oh, look at this crisis we had in quarter four. It's been solved. So again, the mass financial media is always there to mislead, misinform, spread disinformation, because they said, oh, look, the problems that some of you spoke about that they did not acknowledge in quarter four, they'll just spread disinformation when they are trying to mislead us, to tell us the global banking system is robust and healthy. So they said, look, the problems are over. But by early March of this year, so just 7 months ago, right, because it's October now, U.S. central bankers, they ramped up their aggregate operation limit back up to $500 billion, from 30 to 120 billion, back up to $500 billion. And it's remained there since. So these persistent operations that pump trillions of dollars into the overnight liquidity markets reveals that the global banking system to this day is still not receiving the levels of liquidity they've received from drug cartel money in the past, and that central banks thus have been required to step up and fulfill the role that normally drug cartels fulfill for the global banking system. It also reveals exactly why when bank CEOs like Hong Kong Shanghai Banking Corporation CEO Stuart Gulliver claimed that he had no idea that we were laundering billions of dollars for the repugnant, most violent drug cartel in the world, the Sinaloa drug cartel, when he made that claim. That He's flat out lying to people because it's all a public show. Like Jamie Dimon says about cleaning up criminality, the systemic criminality of JP Morgan bankers. By the way, I just read like another article, I think it was actually on Zero Hedge, that said like 50 JP Morgan bankers, maybe it's 500. I don't know, probably 500 because JP Morgan is such a big bank with so many employees. But they said that they basically applied for loans due to coronavirus economy. Like these are the people that are basically committing complete fraud, getting an aggregate of millions of dollars of free money from the government, and they're like JP Morgan bankers that make millions of dollars a year. It's like insanity, or at least hundreds of thousands of dollars a year, and they're basically stealing U.S. taxpayer money by fraudulently applying for emergency loan help that was given out in response to the economic lockdowns in America. So again, we know that the operational chain of command never intends for such crime to end. So once regulators come out and just give a slap on the wrist, like a $1.7 billion fine or whatever HSBC had to pay for laundering all the Sinaloa drug cartel money, we know that, it's kind of like a wink wink kind of deal where they say, hey, like I'd be shocked today in October 2020, if HSBC is still not laundering Sinaloa drug cartel money. I'd be absolutely shocked. It would shock me if they weren't, because the global banking system needs that money. And the regulators, they put on this dog and pony show, but it's all smoke and mirrors for the public to believe that they actually are trying to stop crime when they have no intention of ever stopping crime. Because if the drug cartel money was completely shut off, we've seen what's going to happen. It's going to have dire consequences where central bankers have to come in and create trillions of dollars out of nothing just to prevent U.S. banks from failing and from going bankrupt. So we know that there's no intention on the part of regulators to ever put this criminal behavior to an end. Okay, so one thing we can look at is we know that there will be consequences, right? Because central bankers are creating trillions of dollars of liquidity that normally would be provided by drug cartels, that is needed by the biggest U.S. banks in America. And how has that affected the MZM base, the MZM velocity, and the SOFR? SOFR stands for Secured Overnight Financing Rate. The MZM velocity, MZM stands for Money of Zero Maturity, MZM. And it's a measure of liquidity that represents all money readily available or in a liquid state. Although, so it wouldn't include non-liquid forms of money like certificates of deposit with like a 3-month, 6-month, 9-month, 12-month maturity, because it's not immediately available in liquid form, right? So MZM is exactly what it sounds like, money of zero maturity. So and you would have to go to the link to the article I posted on my news site, which I'll put in the show notes below, to see these charts. So I'm not going to put it in this video because the picture's not big enough anyways if I insert it in this YouTube video for you to clearly see, but they're big enough on my news site. So just go, it'll be the first link in the podcast show notes. You can go look at those charts. So what we see is, we see a parabolic rise in the money of zero maturity in the monetary stock, but the velocity, we see it actually falling off. So the velocity is not, because if the money was actually ending up in the economy, we see a hockey stick like formation in the velocity of MZM money stock as well. And then with the secured overnight financing rate, we saw a massive spike about a year ago, up to 5.25%, when that interest rate should be almost zero. It should basically mimic the Fed funds rate, right? What banks lend as far as the interest rate to what the central bank, U.S. central bank, will lend money to other banks within the Federal Reserve System in America. Because what the secured overnight finance rate represents is the interest rate that other banks charge other banks to borrow their money, but on a secured basis. So that loan, even though it's overnight, right, shortest term possible, just overnight, they will want that secured with some type of high level commercial paper like U.S. Treasury bills or something of that note. So basically, the interest rate should be zero. So when it spiked to 5.25% in September 2019, it showed two things. Number one, that bankers didn't trust other bankers to return the money that was lent to them. And to compensate for that, they required an absurd interest rate of 5.25% on overnight money. And number two, they didn't trust the collateral. So even U.S. Treasury bills, they didn't trust, because if they trusted the collateral, say instead bankers collateralized it with physical gold, they will 100% trust that, right? The SOFR would never have exploded to 5.25%. So it shows they didn't trust the collateral. What does that mean? When they don't trust the U.S. Treasury bills as collateral, and they don't trust bankers to give them back money lent to them on an overnight basis, it shows that the reality of the entire global system imploding was very real a year ago. Has that been fixed? No, it's not been fixed. And in fact, it's gotten worse because, as I said, the U.S. central bankers have had to step in and fulfill some of the roles typically played by the biggest drug cartels in the world. So they've had to create more billions, trillions of dollars every month out of thin air that normally they wouldn't have to do. And that is going to have blowback consequences. If you don't know blowback, it's a CIA term that says solving a problem in the immediate term, it's going to cause much greater negative consequences in the long term. And it's going to blow back, exactly what it sounds like. It's going to come back to the entity that is basically creating this scam, which is the U.S. central bank. But when it blows back, it will come back to all U.S. dollar holders, primarily in the world, which are Americans. So that's what's going to happen. So again, people say, oh, you don't have to worry about, because look at the MZM velocity. Again, you have to go to the chart to see that it's fallen way off. So they said, look, U.S. bankers may be getting all this liquidity, but they're not lending any of it out. They're just using it for the day-to-day operations, because without it, they'd be bankrupt. So it's not getting out into the market and causing all this inflation, so we have nothing to worry about. Trust me, that's not the proper way to look at it. Actions like this that are precedent always have consequences. They might not be immediate, but they always have consequences. If they didn't have consequences, why would those that are pushing the New World Order agenda be so adamant right now about locking down all these countries, all the economies, putting hundreds of millions of small businesses out of business permanently, putting billions of dollars of human life at risk for starvation? So why would they be doing this or hastening their global reset? Because they understand the real dangers in the global economic system. So that's why they are expediting their New World Order global reset plans, because they need at least 90% of all of us. Not all of us, meaning if you watch this in Australia, 90% of all Australians or 90% Americans, I mean 90% of the global citizenry to be blindly compliant and obedient. And part of these economic lockdowns are about conditioning people to be blindly compliant and obedient to every single order they give, because they have to make sure that they have maximum blind compliance, maximum blind obedience by the time the financial meltdown precipitates, which will be an event twice as bad as the one we experienced in 2008 for all the reasons I just stated in this particular podcast. So that's also a reason to continue stacking physical gold and silver. And that wraps up today's SK Wealth Academy podcast. So as always, thanks so much to all my patrons that are watching this. Thanks to all those that have donated to my GoFundMe campaign to launch my academy, because that has really helped out, as my savings have been dried up by being stuck in COVID travel hell for 180 unplanned days so far, unable to extricate and expel myself from this situation. So thanks a million to all of you. I also, even to produce these podcasts, to produce the articles on my website, 100% depend on my contributions from all of you watching to continue creating new content, getting it out to you, trying to help you understand what actions and behavior you need to take to survive what is coming up. 100% depend upon your contributions. So thanks a million. You have my deepest gratitude for continuing to contribute. To read my articles first, please don't go to Zero Hedge. Please go visit my website at malamalama.com/WordPress, because that helps me out a great deal doesn't require, and you can read my articles first if you visit my website versus going to the Zero Hedge where they're republished. So come visit my website, do me that big solid. Also, if you want to receive regular financial guidance of the highest quality for just the price of a Starbucks cup of coffee, one cup of coffee, not the price of a Starbucks cup of coffee every single day, just the price of a Starbucks cup of coffee once a month, you can receive all this awesome regular financial guidance from me. You can join my awesome Patreon community. The links you'll find in the show notes. And if you like to help me launch SK Wealth Academy, you can also find the GoFundMe.com link below. So thanks so much for watching. Always remain intensely curious, but more importantly, always remain immensely courageous. Until next time, have a blessed day and take care.